investing $200 per month into the S&P 500. What would that look like? Looking into the future, 5, 10, 15, 20, 25, 30 years or more. What would that look like? Let us jump into my computer. But before we do that, just remember, I'm not a financial advisor. I'm just the person on YouTube sharing my passion for personal finance and financial independence. This is for educational purposes only. Let's go. So here we are in my computer on this compound interest calculator from Nerd Wallet. So our initial deposit is going to be zero. We're going to contribute $200 every month, right? Let's look at our estimated return is going to be about 10%, right? That's what S&P 500 has been returning on average, about 10% per year. Let's look after 5 years what we'd have. So after 5 years of doing $200 every month, we would have a total value of $15,000. Okay? The total contribution would be $12,000, indicated by the blue line at the bottom. And our interest or our gain, dividends and capital gain, would be 3,487. That's after 5 years of investing. Let's go to 10 years. After 10 years of investing $200 per month, we'd have $40,000. So after 10 years of investing $200 per month into VOO, right? Vanguard, S&P 500 ETF, VOO, you'd have $40,000, which is not bad. The total contribution or principal you would have invested at that time, the total contribution you would have invested would be $24,000, right? And the total gains would be about $16,000, almost $17,000. And $200 per month is not bad. You could make that automatic, right? Automatically coming from your checking account when you get paid $200 into your Vanguard account, if that's where you have it, right? Not that difficult. Let me add this. When you try, when you if you're going to use Vanguard, not telling you what to do, but if you're going to use Vanguard, I know they have a, I know they have an Admiral shares. When you invest in, if you choose Vanguard, they have the S&P 500 Admiral shares. The ticker symbol I think is VFIAX. The minimum is $3,000, but if you buy the ETF, you can buy individual shares. One share of VOO right now is like over $400. So, what you could do is, if you're on certain platforms, you can buy fractional share, and you can buy $200 worth of it, or you can buy the or yeah, certain platforms allow you to buy fractional shares. That's one way you can get around. But let's get back into it. Let's look at 15 years. At 15 years, $200 a month, you'd have a total value of $82,894. Notice how the two lines are being separated, right? You see the total value is up here, $82,894. The principal, which is the blue line, is $36,000. The interest is $46,000. At this point, the interest or the capital gain is greater than the principal. That's why you see the separation of those two lines. Let's look at 20 years. At 20 years, $200 per month, you're already at $151,000, almost $152,000. Total principal $48,000. Total interest $103,000. You have more than double the capital gain than the principal. Let's look at 25 years. 25 years, you're at $265,000. And you notice those two lines are going to be separated, right? Because the your money's really working for you. $265,000 in total portfolio balance. $60,000 you contributed in principal. $205,000 is capital gain. Let's go to 30 years. 30 years, you have a portfolio value of $452,000. Principal you contributed $72,000. The interest is $380,000. That's what your money has made for you, right? You can't even see the principal because it's been separated so much. Let's go to 35 years. At 35 years, you have almost $760,000. The principal is $84,000, and the interest is $675,000. That's really your money working very hard for you. At 40 years, you have almost $1.3 million, and principal you've contributed less than $100,000, only $96,000 you've contributed. Almost $1.2 million is your growth. Let's go to 45 years. At 45 years, you have now a portfolio value of over $2 million, almost $2.1 million, and you have contributed only $108,000. $200 a month. We have to start, and we have to be consistent, and you have to have that long-term view. And this is only $200 a month, right? Imagine when you're doing $300, $400, $500, $1,000 a month. This is $200 a month. We know for sure that a lot of us will spend it on going out to dinner once per month. Go out to dinner one time, that's $200 right there. Right? Going to the movies, you're probably almost spending that. So we have it. Right? The total principal that you contributed $108,000, and the interest or the gains is almost $2 million. That's your money working hard for you. And let's do the final one. At 50 years, wow, $200 every month. You're not saving it in the bank. You're investing it. After 50 years, you have almost $3.5 million. You've only contributed $120,000. The gain is 3.3. The gain is greater than $3.3 million. Imagine if you would have been doing this 20 years ago, 25, 30 years ago. But you can start today. The best time to invest? 20, 30, 40 years ago. The next best time to invest is today. Don't delay. Open your account, connect it, start funding it, make it automatic, and the future will be a lot better than the past. This is the MD Investor with another video to motivate us, to get us started. Okay? You can start this for your children in a custodial account. Again, guys, this is real. Let's get moving. This is real. Let's get moving, and let's command our money to grow. MD Investor out.